Hello and welcome to All About Stocks right here on ET Now. This is a show specially meant for long-term investors, and remember, it was an awful week for the markets with the Sensex plunging nearly 800 points on Friday. Lots of uncertainty remains in the markets, but there's no need to panic because over the next half hour, we will tell you how to modify your portfolios and still help you to make money in the long term. Our fundamental guest on the show today, Paras Adinwala, Managing Director and Principal Portfolio Manager at Capital Portfolio Advisors, joins in on the show. Great to have you with us, Paras. Let's talk about the kind of market momentum that we witnessed. It was a fall in the rupee which really led to an absolute nosedive for the frontline indices, and that completely overshadowed the gains that we made in the first 3 days of the week. What is your sense as to what is the next bottom that we'll be looking at for the frontline indices, given that we slipped below 5,500 in intraday trade as well?
I think, Awan, it's very difficult to really call the bottom right now. What we are seeing right now is continuing pressure on the rupee and the resultant war that the central bank and the government has waged, to stem the fall. Until the time we see this war going on, until the time we don't see any stabilization happening in the rupee, I think any announcement that comes in from the government, and if it does not really appease the markets, you will continue to see the decline. And therefore, the sentiment, I think, is pretty nervous and will continue to be nervous for some more time.
Paras, run us through what you think a long-term investor at this point should do, because a lot of experts are saying, you go long, you go wrong, but should one just wait on the sidelines, wait for all of the macroeconomic concerns to dust themselves out before entering?
I would tend to think so, because I think the turmoil is just a bit too difficult to digest right now. Until the time we see some kind of stability returning, there is absolutely no point in really participating in this kind of market, despite the fact that there are a lot of bargains available in the market. But I think I would indulge in bargain hunting once the rupee stabilizes.
Paras, everyone says that when there's a lot of volatility in the market, the best way to cushion the fall is to put your money into the select defenses like FMCG and IT or pharma stocks. But it seems like some of these sectors are also now losing their sheen. In spite of this, which are the sectors or sector that you would derive the most comfort from?
Any business that is export-oriented, and has its realizations coming in dollars, I think those are the businesses to be kind of invested into. And therefore, my sense is IT and pharma will continue to be the flavor. They will continue to outperform the market. If the markets do decline, we will certainly see some kind of decline happening in these stocks as well. But the amount of decline that we see in other stocks will be far higher than those in IT and pharma. And I would also want to add one more sector which also tends to benefit quite a bit from rupee depreciation, and that's textiles. I think IT, pharma and spinning yarn or textile companies will benefit from further depreciation in the rupee.
Paras, let's move away from that then and discuss the individual stock queries that we have. Today, we've got Sanjay Pethankar's query, who he sent in. Now, he's saying that he holds 500 shares of Wipro at an average price of 449 rupees per share. He now wants to know if he should hold on or if he should sell. Paras, given the fact that this has been one of the resilient sectors on account of the way the rupee has behaved, he is still making a little bit of money on this investment. Do you think it's advisable for him to wait it out despite the current volatility, or would it be advisable for him to get his profits off the table?
I think it makes a lot of sense to kind of hold on, because there are clearly tailwinds in that are favoring the IT sector. And if one looks at the last quarter numbers of Wipro, they were better than what people expected. So clearly the improvement in the US economy, the improvement in Europe, coupled with continuing depreciation of the rupee, seems to be benefiting the sector quite a bit. So I think there is no point in really exiting the investment in Wipro.
Okay, Sanjay, that's the word of advice that Paras has for you. You can look to continue to remain invested in Wipro. Let's deviate focus, talk about the next query for the day, which in fact comes in on Bharti Airtel. Ashish Kapoor has sent it in, saying that he holds 100 shares of this counter at an average price of 335 rupees and now wants to know if he should hold or sell. Paras, it really seems like most of the regulatory overhangs have already been factored into the stock price. You also have the fact that the Zen worries seem to be behind it. And despite the recent volatility that we've seen, telecom stocks have managed to hold out. So would it be a hold recommendation on Bharti?
Oh, absolutely. I think looks like the worst seems to be over for the telecom industry. Although Bharti seems to be having some issues with its African operations. But having said that, once they mend whatever are the deficiencies in those operations, I think the delta could be very significant. So at the current levels, there is every merit in really staying invested in telecom, or if one does not have the stock, I think it's time to put in money into telecom.
Okay, let's take on board and Vipin Keshwani's portfolio and help him out with it. We'll start off with the first stock. He was holding on to an HDFC close to 100 shares at a buy price of 910. Now, Paras, what really unnerves the market is when resilient and strong, fundamentally strong names like an HDFC nosedive. 910 is where he purchased it at. What's the call now?
Yeah, I think HDFC is a very good stock to own. While we might see some decline happening in the very short term due to weakness in the markets, but over the longer term, HDFC continues to be a very strong stock. I think the business is great, the management is great, the balance sheet is great, and the valuations will only get better if the markets do decline. I think it's a very good time to be buying into HDFC, and if one does own it, just stay put.
Okay, let's talk about another stock then that he holds of Prestige Estates. And given the overall interest rate scenario, the shaky economic backdrop, do you think it's advisable for him to exit from a Prestige Estates, put his money elsewhere perhaps?
Prestige Estates seems to be kind of defying the overall industry scenario in the real estate sector. I think the company has been declaring very good numbers quarter after quarter, and in my view, the company is very well placed in one of the best locations in the country. That's in Bangalore. So my sense is, I think it is definitely worthwhile to kind of hold on to the stock considering cheap valuations and the kind of performance the company has delivered. So the recommendation is a hold.
Let's talk about a JSPL then. 328 is where he purchased that one. And although we have seen a rally in most of the metal stocks, it seems like the underlying fundamentals do remain rather weak. What would be your opinion on this?
I tend to agree with you when you say the fundamentals are weak, but having said that, the valuations are also very compelling. The replacement cost of the entire capacity of JSPL, is at a significant premium to its current market cap, or maybe even, for that matter, even enterprise value. So if the investment horizon is, say, at least 3 years plus, then I think JSPL should be held on. But if it's just about 1 year's time, then I think it's a time to exit, because we can see lower prices from the current level.
Would that be a similar view that you would also share for a Power Grid, because he has picked it up at those levels of 100 plus?
Power Grid, I think the company has been delivering quarter after quarter. I think very good balance sheet. Everything seems to be absolutely in order. But it's a retired man stock. If one wants to have a dividend, then I think that's a great stock to really own. But for capital appreciation, I think there are better stocks available. So my recommendation would here be to kind of exit out of the stock and get into something better.
Well, the last time that he came on the show, he recommended a portfolio. So let's run you through what exactly he had selected. From the banking space, there was Axis Bank and SBI. Capital goods included L&T. Maruti also found some flavor. From the defenses basket, he had chosen to select a Sun Pharma, ING Vesya from the banking lot once again, a Bajaj Corp and Bajaj Finance, as well as PVR from the media space gave him good returns, and there was also a Soba Developers. Well, Paras, let's start off then with some of the banking stocks that you put in your portfolio. There's a mix of large as well as mid-cap names, and on account of the way the overall banking index has performed, what would be the changes that you would make here, if at all any?
I think looking at the sharp depreciation in the rupee, there is clearly a need for some change in the portfolio. In addition, the way the U.S. markets, the U.S. economies are turning out, the way the European markets are turning out, I think that also again merits some kind of change in the portfolio. And therefore, I am replacing SBI with TCS. I'm also replacing Maruti with Tata Motors. And therefore, the new weights, would be Axis Bank finds a weight of 15%, TCS finds the highest weight of about 20%, and Maruti, which had a weight of 10%, has been replaced with Tata Motors at 10%. So rest of the weights in the portfolio remain the same. And this is largely done with the eye of capitalizing on the turnaround story for IT due to improvement in US and Europe, as I mentioned, and augmentation of growth prospects for someone like TCS. The reason I bought into Tata Motors is the fact that Tata Motors is more of a global play rather than a local play, and bulk of the profits and the sales growth comes in from Jaguar. And my sense is the prospects seem to be very, very promising for Jaguar in the long term. So I think with the slowdown in the Indian economy, it makes a lot of sense to get out of Maruti and buy into Tata Motors.
Let's also touch upon an L&T, because you did have the results which came in as a big disappointment, and a lot of analysts seem to be negative on account of the way the overall macroeconomic environment is shaping up. Do you think you would still retain an L&T in your portfolio, Paras?
Yes, L&T needs to be retained into the portfolio because this is a very long-term portfolio. Whatever hiccups that we are seeing right now in terms of low capex in the economy, I think that's going to be only for the short to medium term. Over the long term, that's 3 to 5 year horizon, I think L&T will do very well. And if one looks at the profile of the business, that also seems to be gradually changing, where L&T is bagging a lot of orders from Middle East and from other countries outside India. So the order book, which used to be traditionally dependent on India, is now making its way into a large proportion of the order book coming in from international business. So I think the profile of the business is changing, and that makes L&T a worthwhile buy, both for the prospects from India as well as from the international opportunities.
Okay, so that is what Paras's tweaked portfolio looks like. He's retaining Axis Bank, exiting SBI and instead putting his money in TCS. L&T will be retained, exiting Maruti and instead Tata Motors is a preferred bet. And he's holding on to Sun Pharma, ING Vestia Bank, Bajaj Corp, Bajaj Finance, as well as Sobha Developers and PVR, as you just heard him mention. Well, some more individual stock queries then. Divya Hazra has sent in this query on Axis Bank. She holds 65 shares of the counter at an average price of 950 and wants to know if she should hold on or sell. So Paras, there clearly has been a major underperformance when it comes to the banking stocks, with the Bank Nifty this week just beaten out of shape. What would be your call on Axis Bank, given that Divya is in the money? Do you think it's pertinent for her to hold on?
Yeah, I think it makes a lot of sense to hold on, but having said that, let me kind of also caution here that in the short to medium term, there is further pain in the entire banking sector due to the volatility in the rupee. And until the time rupee stabilizes, I think banking stocks will continue to be on the receiving end. But over a 3 to 5 year perspective, I think Axis Bank continues to be one of the most promising investment stories. And therefore, there is no reason to really panic and exit out of the stock.
One of the most promising investment stories, Divya, so stay on to an Axis Bank. Staying with the banking space, Ajit Gupta has sent in his query on ICICI Bank. Now, he holds 95 shares at a buy point of 1,080 rupees. But given that now the 4-digit number is, a long gone on in ICICI Bank, what would be your advice for Ajit?
I think it's again the same story as Axis Bank. ICICI Bank again is a very, very promising story over the longer term. But in the short term, one will have to digest at least 15 to 20% volatility from the current levels. It is possible that the stocks could correct even further, considering the depreciation in the rupee. And but not to get panicky, I think that would be a great time to really add on if one has the capacity to buy more. The growth story in ICICI Bank continues to be as promising as that in the Axis Bank.
And finally, to our last query, sent in from Ravi Taluri on Oberoi Realty. Now, Ravi holds 200 shares of the counter at a buy point of 220 rupees. And he has the same question: should he stay invested or should he sell? Well below both the daily moving averages at a point of close to 180. What's the call on Oberoi Realty in light of the interest rate environment?
The interest rate environment continues to be challenging, and the latest yields indicate an upward trajectory, which is not really good news for the real estate sector. While Oberoi Realty is a very good company in the real estate space, I think the company could give good returns, over the longer term. But my sense is there are better stories available. Oberoi Realty has a balance sheet which is absolutely debt-free, but if the interest rates do harden, I think that's really going to be some kind of a problem for the real estate sector. And therefore, I think it makes a lot of sense to really exit out of Oberoi Realty and get into something which is better.
Well, it's time for our report card segment where we will assess the pick that Paras Adanwala gave us the last time he joined in Feb 2012. Well, he had recommended a long-term call in the auto space on Maruti Suzuki. He had placed a target of 1,700 rupees and had a time horizon of 1 year. Now, given that the target price has already been achieved, Paras, but the stock is now trending lower at levels of close to 1325. I know we've discussed it, but for those people who's bought the stock when you recommended, what do you advise that they do at the current juncture?
I think Maruti is clearly facing issues in the short to medium term, because of a slowdown in the car segment. While if someone has really bought into the stock and has the capacity to hold on for next 3 to 5 years, I think it may well turn out to be a very good story. But the company is very strong, the brands are good, the cars are good, but for the next 6 to 12 months, I think it could be a bit of a pain. And therefore, if one has bought into the stock, just stay invested. If one has not really bought into the stock, then just stay clear.
Okay, that's the call coming in on Maruti Suzuki, the stock that Paras had recommended the last time. But let's help you out with some more portfolio queries, and this one has been sent in from Rajat Bhatia. Now, he's got 3 shares in his portfolio, and Paras, he wants to know whether he should hold on or sell. A hefty quantity of 1,000 shares of GMR Infra at a buy point of 13.8 rupees, 2,000 shares of Sourceline, and finally that he's purchased at 9.75 rupees, and 500 shares of Jaiprakash Associates at a buy point of 37. Well, it looks like he's clearly got all of the high beta names and many are avoiding at these levels. But let's discuss the GMR Infra. What's the view on the overall debt burden being reduced? Because yes, the results did come in as a bit of a breather, but at levels of 13.80, do you think it merits a hold?
Well, I think the valuations are very cheap for GMR Infra. But I think they will continue to stay cheap. In my view, they can get even cheaper, looking at the quality of the balance sheet and the state of the infrastructure sector. So I think there is no point in really holding on to the stock. There is every case to exit out of the stock and get into a stock where people can really make money. So it's a sell for GMR Infra.
Okay, it's a sell call coming in for a GMR Infra. What about a Sourceline? A lot of people have really burnt their fingers with this one, buying it at high levels of close to 50. Fortunately, he's purchased it at a price of close to 10 rupees, but the counter is now almost a 5 rupee stock. What's your advice?
Just sell. There is absolutely no rationale for holding onto the stock. I think one should exit at every possible price.
And finally, let's take it to the last stock then, Jaiprakash Associates. Do you see any potential in this one, in the high beta name, which has really taken a nosedive in the last 1 month?
Unfortunately, all the stocks, as you put it, are very high beta, into the wrong spaces, very debt-laden stocks. I think investors would do well to really kind of do a good amount of due diligence before getting into the stocks. Otherwise, it's loss-making every time. As far as Jaiprakash is concerned, I think it's a similar story like GMR Infra. Maybe slightly better, but it's in the wrong space. Balance sheet again heavily leveraged. I don't see any reason why one should really be making money in the very short to medium term. Yes, over the longer term, maybe there could be some possibility of good gains, but I think there are stocks which can give you better gains than Jaiprakash. So again, on a rise, I think I would recommend exiting another stock and getting into something better.